Tough news for Canada as our unemployment rate rose to 5.5% in July. As Canada's population continues to grow rapidly, rising unemployment signals the economy isn't creating enough jobs to absorb a larger workforce. To top it off, high interest rates are expected to make matters worse as borrowing costs rise for businesses and consumers. This as Telus announces big job cuts. Look at this lineup at a Fortino's in Brampton. People waiting to apply at a job fair. Canada's unemployment rate rose again last month as the economy struggles to create enough jobs to match the pace of population growth. Statistics Canada reporting today that employment was little changed in July, falling by 6,400 jobs. Meanwhile, the unemployment rate ticked up to 5.5%, marking the third consecutive month that the unemployment rate has risen. The month of May served as a turning point in the labor market as the unemployment rate rose for the first time in 9 months. Prior to that, the unemployment rate was hovering at 5%, just above the all-time low of 4.9% reached last summer. As Canada's population continues to grow rapidly, rising unemployment signals the economy isn't creating enough jobs to absorb a larger workforce. Job vacancies have also declined in the country, offering another sign that the labor market is loosening. High interest rates are expected to push unemployment even higher as borrowing costs rise for both businesses and consumers. The Bank of Canada has raised its key interest rate to 5%, the highest it's been since 2001. This is what Governor Tiff Macklem said last month.
We are also acutely aware that higher interest rates are making life more difficult for many Canadians. And we know many Canadians are asking, is the Bank of Canada done raising interest rates, or will rates need to go still higher to relieve inflationary pressures? The short answer is we will be taking each decision based on the available information at the time.
The central bank is hoping its aggressive rate hikes slow the economy down enough to bring inflation to its 2% target. It cited concern about the pace of wage growth as well, which rebounded in July, rising 5% year over year. Inflation in June fell to 2.8%, within the Bank of Canada's target range of 1 to 3%. But core measures of inflation, which strip out volatility, show prices are still rising quickly, and new forecasts from the central bank suggests it expects inflation to get back to 2% by mid-2025. But it will likely be a rocky road until then, with companies announcing cuts frequently lately. Telecommunications giant Telus says it is cutting 6,000 jobs. The Vancouver-based company says the cut includes 4,000 workers at its main Telus business and another 2,000 at Telus International. The company also says it will offer early retirement and voluntary departure packages. A financial markets data firm says Telus had nearly 110,000 workers at the end of last year. Plans to reduce its workforce come at the same time as the company revealed its second quarter net income fell almost 61% from the same period last year to $196 million. Telus's net income amounted to 14 cents per share for the quarter that ended June 30th, compared with 34 cents per share in the same quarter a year earlier.